Deborah works at ShareTech, and she was the one who introduced us to Denise, and she's been a big supporter of Cassandra's mission for a long time as well.
Hi, how are you? I am Deborah, and Katya, I just love your presentation. I love that you are a former CEO of a credit union, and so therefore really do appreciate where credit unions started. That's what I love so much about Scott's presentation. This credit union is taking it right back to the why of why we're all here today. And I'm really interested in speaking to you after this presentation. Me and Lorenzo have had countless conversations about BaaS, and I am really anxious to show more about our organization. And my journey is important, and I'll show you why. So, out of college, I started at LabCorp, Laboratory Corporation of America, multi-billion asset publicly traded corporation. I've been part of the corporate world almost 14 years. In 2007, I started in this industry, and my CEO, Davis Tyler, he was an extremely passionate person about the CU movement. He told me everything about credit unions and why he was one of the first core processing developers in the 1970s. And I learned that most of the credit union cores in our industry, and I'll show you something in a minute around that, actually were developed in the 70s and the 80s as a result of men that were coming from NCR or Burroughs Corporation and developing their own mainframe systems from those two
Because
corporations.
this is before cloud computing, y'all. Think of our
Yeah,
members.
and it's really important to understand where most of the core systems came from. So it's important to understand the history of the credit union movement. So the history of credit union movement, the history of really core development and technology is really important, and it follows along because when you saw the 60s, 70s, the cap of the credit unions, number of credit unions in the industry, more and more people wanted to get into that, and they wanted to develop technology for that. And then you see the decline of credit union numbers, and then you see the decline of actual core systems. And what you have remaining, not every core system, there are only really, in my opinion, there are only four that are out of all the ones remaining. Now, Katya, you're probably familiar with the Callahan and Associates Core Processing Guide. This is, as of January 6th, 2026, what the core top 20 core systems looks in our nation. It is not talking about Canada or the European nations, and this is specifically US. And this is number of credit unions served by each core system. The reason why I'm starting with this and not just talking about ShareTech is it's really important to understand where we are in the industry and more about the core systems and how they relate to fintechs, how they don't, who they serve, and whether they're legacy or they're evolving to the web-based BaaS model that we are. So you've got Fiserv there. First of all, we all know what happened to Fiserv stock. And one of the key reasons why that happened in December and continues to this day is because they got away from the core where they started, which was core systems. They are paying too much attention to the payments side of their business, and they really have gotten far away from serving their credit union and some bank, but mainly credit union core clients. They are seen as not caring about the relationship. They're not trying to meet their clients where they are. They're treating the core system just as another business line, and the market is reacting to that. There are other things too, but primarily the Wall Street analysts are listening to client base and they're saying, you're no longer who you used to be. And so you can see a real loss in that market for them. And you'll see that market decline. Jack Henry, also a publicly traded corporation, second in line for number of credit unions served. They serve mainly larger asset credit unions, and they only have one line of business, and that is Scimitar, unlike Fiserv, who had 12 core systems, and they would sell the core system based on the asset size of the credit union. And when you look at this screen, when you look at all of these top 20 credit union cores, there's something that most people don't know about these cores in the industry. And that is that there are only 3 that have web-based application systems, and all of the other core systems are considered legacy. And Katia, again, you were talking about legacy systems. These are systems that don't necessarily have open API. And so when it comes to fintechs, which is, Lorenzo, my understanding, primarily where your credit union is going to be focused, really not many of these credit union core systems in our industry are going to be able to serve you, not to the level at which you want to be successful. So then what I'll do is I'll move to a different screen, which is my presentation. There are choices in our industry that are going to align with your vision, and us being one of those for sure. And how it's important not only to understand where we're driven and focused on open API, fintechs, but also being true to how we started and where we started, and very centered to the heart of our industry, very support and service oriented as well. Okay. So I thought it was really important to start here because there are choices, 20 right there in front of you. But not all of these choices are going to allow Penthea to get where you need to go. Okay. So let me start here. So ShareTech is, as you saw in that other screen, one of the top 20 core systems in our nation. And at the center of a credit union technology basis is the core itself. But most credit unions are using technology to offer most of what they offer. Most core systems are going to allow all transactions to be maintained. What's important to understand about, in my opinion, Penthea's vision is that out of those 20 cores you just saw, there are only 3 that are web-based. So we are web-based core with standard open APIs integrated to a lot of innovative industry-leading partners of financial, which is a fintech that allows us to do a lot. And I can talk about that later. I'm not going to sit here and talk about all the ASA allows us to offer, but they are a fintech and they've won a ton of awards for top fintech position. And one of the things that they are allowing our customers to do is their credit union users and their members can aggregate all of their accounts in one app. So talking about forward thinking, talking about innovation, talking about fintechs and how they fit in and important or aligned to Penthea's vision, this particular fintech that we have embedded in our digital technology allows you to aggregate, or your members to aggregate, all of their apps in one app. What? They don't have to go to a Chase app and then the ShareTech app and then Bank of America app and all of these different apps. So it allows a member to aggregate all of their accounts in one place. So they can go in and they can see what's going on in Bank of America. They can go on and see what's going on in their mortgage and all of that in one app. So back to what you were talking about, Katia and Lorenzo, the vision for Penthea, that's why that's really important for me to share with you today, is that out of all of these different core systems, we really are being at the forefront of innovation. So we have 4 different locations with an amazing customer service staff. Again, the core that we offer is entirely web-based. It can be accessed anywhere, anytime. We have the open API, which Lorenzo, we can talk about further if you'd like. And then the digital banking, we have our own digital banking solution. But when we offer on digital banking, it allows the credit union to feel taken care of and confident that their priorities for technology are our priorities. So you don't have to worry about if you're going to move on to the core April 1st, but yet the digital banking solution provider isn't going to be ready until May 1st. That simply won't work. So the priorities are aligned. It's not that I'm against or talk about not choosing other digital banking solutions, trying to stress for our particular core. We offer digital banking also and very innovative, such as what we offer with ASA Financial as a fintech. So there's that. Professional services, really important is a part in perspective is how a core approaches implementation. In your situation, you're going to select a core and you're going to be implementing that core. A lot of instances, just taking Scott's credit union as an example, they've been chartered since 1958. And so they would have to convert their core system and their history and all the things that they need to ShareTech if they were to choose ShareTech. So implementation versus conversion, both very important. Yeah. So a little bit more about that. And this is a slide that helps you understand where we focus on customer success. And not from a sales perspective, but from the perspective that there are choices in the industry, and many of them come from a certain era of the credit union industry, US background, and not all of them are scaling. As a matter of fact, there's only 3 or 4 that I can name that are actually scaling, paying attention to being web-based and evolving and offering open API, which then fits nicely into the fintech vision that you have.
No, it's good to have somebody from a core provider to really talk about this. The first question our members wanted to ask is, do you have conversations about banking as a service at ShareTech? Is that something that's on y'all's radar?
I did speak to my CEO, Stephanie Decker, which is now Rachel Collins, and I have spoke with Scott Abramson, who is our CTO from Jack Henry. And so it is something that we are discussing. Joe Veeder, that I introduced you to before, very interested in that as well. And if you think about it, banking as a service, this quote unquote SaaS model, that is all about what Rachel Collins, our new CEO, is all about. She has run SaaS companies throughout her career. She is a developer and a programmer herself. She has a vast background in IT software, and she's very interested in learning more about how we can lean that way. But if you think about what I said relative to our core, opposed to most legacy cores in our industry, with the open API, we can allow for fintech integration a lot more quickly than most in a legacy situation. It's not that we're not going to cause a little bit of friction there per se, in that we're going to make sure that the fintech meets standards and that the data is going to flow 360 so we can be the single source of truth, which is also important from a ledger and accountability perspective. But at the same time, paying much more close attention to that sort of SaaS and BaaS model more so than most cores in the industry.
You mentioned not serving the smaller asset size CUs. What is ShareTech's sweet spot asset wise?
Yeah, so I would say that looks 50 million to 150 million.
What is the biggest challenge in a core conversion? Because you've done several. What's been your experience?
I can answer that one. It goes back to 2 things. One on the core side, and that is talent, focus. On the core side, testing and a project plan. Project management is extremely important, and having project managers that are really leaning into their teams and the credit union teams to stay on track and stay aligned. On the credit union side, okay, you're dealing with an organization of humans, and on conversion, not implementation, your organization. You haven't learned any bad habits. If you don't have some sort of vision for how something should be process wise, you can basically make it the way you want it. Naturally, it has to also meet your policies that the NCUA is going to hold you to, but you don't have anything that's going to hold you back. In a conversion situation, oftentimes what I've seen in 20 years is that on the credit union side, You have to have accountability. You have to have buy-in by all the people in the credit union, across the branches, across the departments. And the humans have to unlearn the way they did things on the other core system and learn the way the new core system will work. Our core system, you've seen it before, see the ease of use, the intuitiveness of how you move through this system. Not all systems are like that. And it can be quite hard for the humans from the credit union to unlearn the way they've always done things and learn the new way. And that's why it's also important to choose a core system that does have that intuitive ease of use, because many legacy core systems, you've got to remember 800 tool numbers. You've got to learn all of this stuff, and they're clunky and they're complex and they're harder for that unlearning and learning to occur. Does that make sense? The most successful are those where there's great deal of buy-in by the staff of the credit union. Everybody's committed to the learning and the training. We have analytics that track and trend all the training across the credit union, tell the credit union leaders who trained that day, what they trained on, how long they trained, and did they pass? And so having software and analytics that track that on the core side is extremely important as well. And then on the core side, they have to have knowledge base, staff this knowledge base, and committed to the project planning, project management of the conversion, and making sure that key milestones are met in driving that forward. So it's definitely work on both sides. It's not just the core, it's the credit union as well.
What usually motivates a core conversion? Is it
Okay.
just a financial question or?
It is not, actually. Oftentimes, in the 20 years that I've been doing this, I have found that most core conversion decisions are around limitations of the initial core choice. So let's say a credit union started at 50 million assets, or they started at 38 million in assets. Quite quickly, as they want to scale and they want to grow and succeed and have a different vision for what they want to offer to membership to attract members and retain members, because the industry is changing and evolving. There are some cores that simply cannot do that, but there are just some cores that don't have the resources to add new services, develop an API that allows for frictionless integration to fintechs. They just don't. And so the main reason I see credit unions converting to other core systems is they've outgrown the core system they own. And that core system no longer not only allows them to scale and meet their vision, but and won't in the future. And so that is the number one driving factor. Cost is another. And so as they grew in success, they have more net income, higher capital ratio, and then also a bigger need to grow and succeed, then they can afford a better core. So it is somewhat cost driven from that perspective.
Then it's interesting you brought up the merger questions, because mergers are only happening more and more every year among credit
Sure.
unions.
Mhm.
What can you give us? Can you give us a little insight into what that process is like? Are most credit union mergers between credit unions that use the same core, or are they credit unions that use different cores?
So mergers happen for a number of four reasons. The fourth reason is enhancement of services. You can see that in that report over and over again, every quarter. And the main reason, when I look at the last 4 quarters of this year and last year, the main reason is enhancement of services. So, in other words, credit unions tend to be merging into other credit unions to get the technology they need, rather than actually choosing a different core and going through that conversion process. They're just merging together to synergize their asset capacity. And typically you find that the credit union that they're merging into has more services and technology than they were able to offer. Does that make sense?
The only thing worse than a core conversion is not converting at all.
The core is who you are. You can't do anything more than your core can do. And it's the number one reason credit unions can't or do not grow in what they can offer, is because the core can't. And so The core choice and the core that you partner with is extremely important to the vision of the credit union and the trajectory and growth and vision of the credit union. It is a painful thing to go through. I won't sit here and say, oh, great, let's work, but it's absolutely necessary and most of the time critical.
Great. Deborah, thank you so much for sharing your experience. This will be very valuable for our membership to really understand the operational complexity of operating a core system,
Yeah.
doing these transitions, and how, because we strongly believe that the bottleneck to more banking as a service happening at all levels, both in the for-profit context and the credit union context, is the core systems, because most banks do not have their own engineering team that operates their own core. And so the way you're outsourcing that, even if a bank wanted to do this, you would have to get the core provider involved. And that ends up being the bottleneck to more fintech innovation happening in the US.
And the larger the core, the worse that is. I'm not bashing anyone, but your multi-billion asset, publicly traded asset core systems, those are where that bottleneck comes in the most, if you ask me. And then you top that off with the fact that they're legacy systems on top of that. So at ShareTech, again, I'm not selling here. I'm just saying we are not publicly traded. We still focus on what is important, which is customer service, support, success, and growth of our credit unions. Just like credit unions focus on that for their customers and their members, and doing it in a way where we are removing as much friction from that process of fintech application as possible. But with the rails that Katya so kindly spoke of for security and
So absolutely.
accountability.
And I'll conclude with this. If our movement is going to be successful, we have to not just get other credit unions to embrace BaaS, we have to get the core providers to embrace BaaS as well, because the fintechs are ready. And we think it's going to be as revolutionary as the credit card was to the banking system. And so in the same way it took credit unions 10, 15 years to
Absolutely.
implement credit cards, they cannot afford to take another decade to engaging banking as a service. And so we're working on arguably one of the most important problems in the whole ecosystem.